If there ever was a day that highlighted the gulf between Wall Street and Main Street, this was it. The Dow came roaring back from yesterday's 600-point plunge, picking up more than 400 points. Much of it came late in the day after the Federal Reserve did something it's never done before, promising to keep interest rates at rock bottom for 2 more years. What the Fed sees in their data is what so many of us feel in our bones. America's economy is weak, good jobs are scarce, and this chart tells the story. In other recent recessions, back in 1981, the Reagan years, and 20 years later after 9/11, you saw some job loss, but then it came back. Look at what's happening this time. Many more jobs lost much more quickly, and they're not coming back with the same kind of speed and force. ABC's Bianna Golodryga starts us off tonight.
Wall Street's wild ride continued today, skyrocketing higher after a 2-week period with massive drops that had wiped out more than 16% of the market's value. At the closing bell, the Dow was up 430 points, the 10th biggest point gain in history. The rally spurred by the Federal Reserve's historic promise to keep interest rates at zero for the next 2 years. It was something Wall Street didn't expect but embraced.
The Fed is an institution that still has a lot of credibility. They read the statement at first and they said, well, they didn't do anything. And then they looked at it a little more and said, well, maybe they threw us a bone.
The reason for the Fed's historic move? They believe the economic recovery is considerably slower than expected. The Fed noted a lack of robust hiring, slowing consumer spending, and a housing market that continues to be a drag.
One day in the stock market, whether up or down, isn't going to determine what happens with the economy. But what is the sense on the street? Are we going to get into another recession?
The sense on Wall Street is no. When you have subpar economic growth, it can feel like a recession.
With 3 weeks of stock market volatility, Main Street is flashing back to the dark days of the financial crisis. Wondering, even with the Fed's support, could the nightmare of 2008 happen again?
Everybody's scared. I mean, the market is up and down. Nobody knows what's going to happen.
The only thing that's doing well this year was the market. And if this goes, then the rest of the economy will probably falter as well.
And Bianna, you look at this and you see why everyone is so worried. The Fed statement from today filled with words like deterioration, depressed, weak, and a lot of people look at this statement and wonder, why didn't the Fed do more?
A lot of people were thinking that we'd get another round of quantitative easing, QE3, with the Fed pumping money into the economy. The Fed is saying that things are slowing down, but they still think we can avert another recession. They're saving some of their tools in their arsenal for more rainy days to come. But George, the folks I'm talking to on Wall Street say even more so than the U.S. economy, they're focused on what's going on in Europe and that ongoing debt crisis because, of course, this is a global economy, so what happens there could affect us here at home.
But a good day on Wall Street today. Okay, Bianna, thanks very much.